Hi, thanks for listening. I'm Ted Lemon. I'm with eXp Realty. Just the other day, on January the 17th, CBS News uh, showed property that was sold. Something that was, you can find on House Sigma. The person purchased the home for 1.4 million in January 22. That was the peak of the market, and now has just sold the home for just a little bit under $1 million. So there's about $400,000 loss in this transaction. Now, I'm bringing this up because there are lots of these homes out there. If you were actually to look at these listings, you're going to see a lot of homes that are being sold at a discount. They list it for a certain price. They're motivated sellers. There's lots of them, and buyers do have uh, quite a bit of an edge on this. Now, the other type of homes that I'm seeing are the foreclosure homes. Foreclosure homes in Ontario, what they have to do is they have to sell at the market value, so they're not going to go deep discount like in the US. There is an increase in list of foreclosure homes, which I'm counting a little bit over 50 foreclosure homes in the GTA area. These are homes that the mortgage company has taken over and selling them at under a power of sale. Over the last 6 months, there's about 150 of them. Some of them have been sold on the open. Those that are still active, there's about 50 of them. And then there's another market for pre-foreclosure homes where the person might have not paid for the taxes, have not paid for the mortgage, and they put a lien on the home. And the mortgage company or the bank, they have to take the person to court and auction off the home. So they've taken a power of sale and gone to court, and they're auctioning it off in the courts. Those ones get really nasty. I've gone to a few of those sessions, and you can make money out of them, or you can lose money, depending on what happens. Sometimes the mortgage that you have to repay as the person that wins, it might be quite big, and you have to do due diligence. There's another issue is that the debt ceiling in the U.S. There's lots of debt. There's a lot of talk about the debt ceiling, but people are not really catching this. Why is it important for Canadians? It's because of interest rates. The U.S. debt ceiling issue is such that if they don't increase the debt ceiling, meaning print more money, that means that the U.S. government cannot pay for the services that it provides, and pay for roads and fix the roads. They cannot pay for government services. They cannot pay for the military. These elements will not be funded. So they have to increase the debt ceiling. And if they do increase the debt ceiling, you have to ask yourself, like, they've been doing this for so many times. They had a crisis in 2011 with debt ceiling. I don't know if people really remember this. So what happens is you have to have another person to the party of the trade. That means that if you're going to be selling debt, you're going to have to provide something that entices them to buy the debt. And under this kind of market, if you're printing much more money, that means that you're probably going to have to increase interest rates. Otherwise, foreign countries or foreign investors will not purchase your debt. So if you print more money, it means that your currency is worth less. Therefore, you're going to have interest rates increase unless you're willing to just have your currency tumble. And the other thing is, like, if they have a debt ceiling issue, that means that they're not managing their finances very well. Therefore, it also affects the country, and interest rates will increase. Now, in the previous session, I had talked about what interest rates would be in 2023, and Jerome Powell is looking at reducing inflation until it's down to the 2% level, and we're nowhere close to that right now. Therefore, we'll be headed towards more interest rate increases for the rest of the year. I don't expect it to fall at all. So we're not going back to 2%. We're not going back below 5%. It's going to be here for a while. Now, for those who have homes, when you run the numbers, which I'll do in another session, as to what you pay for when you're moving from one rate to another, it's quite ugly, especially when you're on a variable rate, you're going from 2%, and then rates are now at 6.2%. It's quite a bit of a jump, because you have to think about what happens is when you have a mortgage the first few years, you're really paying interest. There's very little equity that's that's paid off. So there's very little. Sorry, there's very little principal that's paid off. The bulk of the first few years is interest. So when it goes from 2% to 6%, your payment pretty well goes up a little, close to about 3 times. So if you want to sell your home, or if you're looking for foreclosure homes, kind of looking for deals, look for me. My name is Ted Lem, and I'm with eXp.